Hello, I'm Matt, Director of Programming here at Ascentive. It's my pleasure to present you with an important overview of futures contract symbols to help you, as an Ascentive TradeMap investor, to get the maximum value from your subscription. It's our goal for you to get the highest investment returns possible from your daily buy and sell signals. As an Ascentive TradeMap investor with a paid subscription, you receive buy and sell signals ahead of every trading day, 5 days a week, Sunday through Thursday. When a buy and sell signal email you receive shows it's time to open one or more futures contract positions, you must decide on how you'll execute opening the trade. The first piece of information to be aware of is the historical success rate for each futures contract. This number shows the percentage of time Ascentive TradeMap has profitably predicted trades for each contract. The percentages give you the statistical odds that the position to be opened will be profitable. If the odds of winning in the contract are too low for your risk tolerance, it might be best to forego opening a trade in it. The next piece of information to notice is the risk capital required for each position to be opened. The dollar amounts shown reflect the market's standard minimum initial margin requirement for opening a trade in the futures contracts shown. Your broker may charge a larger amount, and you need to be aware of what its requirements may be. Don't forget you can always open a micro or mini-sized contract of futures contract, so that your investment returns remain high even if the absolute dollar amount of profits is reduced. This is also a great way of reducing your risk, especially if you're still growing your confidence and expertise in futures trading. Finally, when deciding to go forward with your broker to open trades that will add open positions to your portfolio, be sure to open them in the correct direction as either long or short. The direction, of course, is based on whether Ascentive TradeMap says to buy or sell. Then you select which commodity future contract to open, and here's where it can become tricky depending on your broker. If you've had any experience buying stocks, you know that every company's shares has one trading symbol used everywhere. For example, Apple Computer's trading symbol has been, and probably always will be, AAPL. But commodities futures can be traded on any number of the 111 futures exchanges across 44 different countries. Each one of the exchanges can use different symbol codes for the commodity futures they trade. As a result, there is no universal standard for the symbols which refer to the various futures contract commodities. So the symbol referring to crude oil futures contract for your broker might be CL, while for another broker it could be QM, and so on. It's important you know the commodity futures symbol codes your broker uses for all of the 50 particular futures used by Ascentive TradeMap investors. The complete list of these 50 commodity futures is available in the post entitled "What Futures Do We Trade and How?" Now, because futures contracts have an expiration date, we must include a reference to their time period in the symbols we use to open and close positions. Here are the symbols used to specify which futures contract month is desired. Fortunately, these month symbol codes are universally used across all futures brokers and exchanges. That's why they're shown for you as an aid in trading the buy and sell signals. Last of all, in addition to knowing the month of the futures contract, we need to specify the year. Remember, we're dealing with contracts for delivery that can potentially be very far into the future. For example, right now futures traders can open and close positions in the crude oil commodity up to 9 years in the future. And finally, before we finish, it's vital to remember how important it is always to accompany every trade with a trading stop-loss order. This controls your downside risk for the trades you open. When risks are correctly managed, you create a kind of beneficial asymmetry where the possible downside is contained, but your upside profit potential is unlimited. Ascentive TradeMap optimizes all your buy and sell signals using a trading stop-loss assumption of $2,000. This generally means that the most you can lose on any futures position is $2,000, but your broker can grow or shrink that amount whenever you wish. When you shrink that amount, it makes your smaller losses more likely to occur. When you grow that amount, it makes losses less likely to happen but larger if they do. The trading stop-loss price to use for a maximum risk of $2,000 is always shown on your daily buy and sell signals under the column. Getting comfortable with the complexity of using the special symbols and codes for futures trading may take some time, but nearly all traders find it becomes second nature before they even know it. Remember, you're responsible for your investing success. You're always in the driver's seat, and Ascentive Trade Map is a lot like your car's GPS guidance system. Pay attention to what it says, but override it whenever you need to. Always be sure to check back in the archives for updates to the frequently asked questions or for additional training videos. And thanks again for being an Ascentive Trade Map investor.